Hey traders, Nick Shaheen here recapping the week ending 9/14. Okay, so we started the day with cautious enthusiasm on Friday, and it quickly fell apart on a rehash of an old headline. What kind of an old headline? See the candle right here? This is the S&P. So what happened was somebody reported that Trump wants to hit 200 billion in China tariffs. Well, this is the same 200 billion, only hopes were that since they invited them, the U.S. invited so-called invited the Chinese to come back to the table, they thought that, okay, we won't be doing much with tariffs. Well, I knew and stated it that that wasn't the case. We will still see that 200 billion headline that should have hit already but hasn't. So this is a rehash of the same headline. So let's do the math since we're talking about tariffs. So I scoured the internet, and I think this is what I came up with. All right, so I don't know if you can see that. Let me see if I can make it easier for you. Okay, so we had 50 billion that already hit somewhere in June. And then later, somewhere early July, the president said 200 more billion, if you remember. 100, then 200. And then there was a quiet or comment period that started on that 200 billion. September 6th, that comment period ended, and we don't know the outcome. So this is where we're bracing for it to hit. The assumption is that it will hit as soon as it ended last week, but it hasn't yet. So here we are, 8 days into it, and we haven't heard it. Then yesterday the hopes were that we will be talking U.S. and China talking, so that 200 may or may not hit. So today, the headline came out on that 200. So it's the same 200. Furthermore, he added a while back, not too long ago, actually, 276 billion. It's not a site, something like that. So if you add those up, you get somewhere about 520, 540 billion. That's it. There are no more tariffs. That's all we import from China. So you see the headlines hit, it's the same amount of money that we import. Now what can change is the percentage at which we hit them. So if it's a 10% tariff, 10, 15, 20, 25, one time they were a blur by about 25, but I don't know if he'll do that. That sounds pretty harsh. Anyway, so this is the math. 50 already in, 200 waiting to hit. That's the same 200 that came out today. 270 something locked and loaded in the chamber. So having said that, let's put that to bed for now. Okay, I'm going to close that. Back to Friday. So I think it's still a flattish day. Maybe the small caps are down, or actually the only ones that are positive. The VIX is down. The VXX is down. So it's in limbo. I say that because the week is positive because we set new highs or, tried to on a lot of things. So it had a positive feel, but it's not so positive across the board. So if somebody can nitpick it, they can. Having said that, next week is potentially violent. Why do I say that? Because it is the end of the quarter. It's a monthly quad witching expiration. So a whole bunch of stuff comes due. And this is when, in my experience, and this is my spin on it, it's not science, is that big money makes big moves out of nowhere. So we will be surprised one way or another. So it's between 29.40 plus, in my opinion. Let me go back to a daily candle here. Okay, so this is, by the way, the red stuff is, we drew this before they even were here. Probably somewhere around here I drew this. And look at it. It's tracking it perfectly. We tested that zone we were going to test it, and we're right here. That's all-time high. That's right here. That candle, by the way, is called a doji. It's indecision. They opened, they rallied, they tried to sell it, they come back to where they opened. So basically, in plain simple English, oh, I love it, let's buy. No, wait, I'm not so sure. Sell. No, wait, I'm not so sure. Let's close it exactly where it opened. So this is where we are. The day is still going, so it may whoosh lower or higher, I don't know. But this is indecision. The next candle usually, if this ends right here, it's usually big. Here's one. Big up or down, it doesn't matter. Here's one. Here's one. So these are dojis. They're indecisive candles. So we don't know what we're doing as a market, so something will happen next week. So next week I see the potential of revisiting this area or setting new highs up there. So up here or down here. Either can hit. I don't know. Short term, I don't do any credit spreads into that week. I don't want the headache. It's tempting, but I don't want the headache. Okay. So these are the levels on the S&P. I could argue the Qs or the DIA. So I'll add more in the write-up. But the point is, be cautious. I am optimistic. So how do I trade? I lighten up on the froth short-term trade that I have. So if I bought calls for next week or 2 to 3 weeks out, I want to lighten those up, especially if they're green. Why not book some profit? I bought some lottery puts in the SPY, for example. If I'm long a lot of tech, I would do it in the Qs. If I'm long Caterpillar and Boeing, I would do it in the Dow, which is DIA. So be smart about it. I don't sit and hope that things work out. Now, looking at this, here's the Qs, right? So if somebody wants to nitpick a crash, why would one come? We'll talk about that later. This looks head and shoulder-ish. Okay, so if we lose this level, we come down to here. Just to say, we have technical threat. Other than technical threat, another thing that today spooked the market on Friday is this. What is this? That's a TNX. It's the 10-year yield. So if this breaks out, that move is a disaster, literally a disaster. Right now, we're scared about the 3% 10-year. This is like way more than 3%. So by disaster, I mean CNBC will be all over it. Back in February, that is what started the correction. So if I compare it, if I drop the SPY in here, for example, you will see how, when were we? There we go. That was the correction right here in February, right? So because we saw the breakout. Well, now today, all day, is what CNBC is covering is the TNX, the 3.15. For some reason, they drew the line at 3.15. I don't know why. But anyway, but the world will end up here. So if that happens, we could see a dip in the markets, but be prepared. So that's one area that could scare us. The dollar spiked today. I don't know if that's going to hold. Technically, it was weak. We wanted to not hold. We wanted to fall because stocks don't like a high dollar right now. However, technically, here's another threat. Another spike in the dollar will cause another drop in the gold, etc. So be careful there. Plenty to worry about. So next week, I reiterate, it is a potentially violent week, so caution is advisable. I am cautious. I bought some lottery puts just to cover my longs. I do have a lot of longs still in play. I did book a lot, by the way. We lucked out in the pot trade. We were short this guy and closed the short at the open, and look at it now, green. I am going along Tillery, which we did this morning on a quick scalp, but those are fast trades. I couldn't communicate. Long term, this would be a good bet. I underline bet, gamble. I know nothing about the fundamentals. This is just pure hopium play, just money thrown down the tube that could pay big time. Lottery ticket. Just don't break my heart with the amount I invest. So it's a calculated risk. All right, back to next week. We have a whole bunch of reports coming out. The Fed talk is going to be hogging how many they will raise. So now everybody's now nervous about they're going to raise more than they said they were going to. I disagree, because this, back to the TNX, which is the yields, this can't get out of control if Draghi is not going to raise rates. In Europe, they have negative rates, 0 and negative rates, their bonds. So if you buy their bonds, you owe them money. Can you imagine? So they have to buy our bonds, which is the TLT. So this cannot fall too far because people are going to be buying it, because they can't buy negative rates over there. They have to buy bonds. They buy our bonds. That's the only bonds to buy if they don't want to pay money for buying bonds. So the rates cannot go higher if this cannot fall. That's my opinion. So these support levels are important to hold, and I shared trades on these as well. So far so good. All right, Nick signing out. If you have any questions, let me know.